This video is an explanation of how to do practice 3 with some concepts discussion along the way. This one starts with a debit and credit analysis. So you're practicing determining whether they're increased with a debit or a credit. You'll want to keep in mind that it all depends on the accounting equation as to how they are increased. For instance, an asset is on the left side of the equation and it's increased with a debit, whereas the liabilities and owner's equity are on the right side of the equation, so they are increased with a credit. You may want to draw yourself a large T account on a sheet of paper and label the sides so that you debit and credit, and which ones are increased with the left side or debit and which ones are increased with the right side credit. Eventually it'll become second nature to you, but you may want to draw something so you can refer to it as you do the problems. The cash account is increased with a debit because, as I said, cash is an asset, so it's on the left side of the account. The owner's capital account is increased with a credit because it's on the right side of the equation, and so capital is always increased with a credit. Delivery equipment is an asset, so it's increased with a debit. Cash account is decreased with a credit because it has to be decreased or subtracted from the opposite of its normal debit balance side. Liability is increased with a credit because it's on the right side of the equation. All payable accounts are considered liabilities. The revenue account, delivery fees, is increased with a credit because it adds to a right side account. Revenue will add to the owner's equity or net worth in their business, and so it's increased the same way as owner's equity. The asset account, accounts receivable, is increased with a debit. Keep in mind all receivables are debit balance accounts. And the rent expense is increased with a debit, and that's because all expense accounts are increased with a debit because they do decrease the right side of the equation. They decrease the owner's equity account. Most of the time our expenses in our income accounts, those are temporary capital accounts that we have open during the month, and we keep a running total of how much our expenses or our revenue has been for that month, and then at the end of the month we'll close it, and we'll get to that in a later chapter. The owner's drawing account is increased with a debit. It's just like an expense account. It's not the same as an expense, but it's similar to an expense account. Drawing is what the owner takes out for his personal use to keep personal and business separate. Okay, number 2, notice that you can get to this part of the ebook to reread if you need to. This section as you're doing the practice. You can also see a video to visit the author. So Carlos Cameron is going to begin a business called Cameron's Footwear. So they want you to complete the T accounts to show the differences in cash, supplies, Carlos Cameron capital, and utilities after each of the following transactions. And then foot the T accounts or balance them at the end. T accounts are not an official accounting record. It's a learning tool that we really use to be able to visually see the accounts and what happens to the accounts. So eventually you'll be able to do this without thinking about it. You'll know what account is obviously the debit, which one's the credit, and how it's increased or decreased. But in the beginning, until you get used to it, you may want to use your drawing on your sheet of paper to refer to. So the first thing that happens in most businesses is they have to get some cash from somewhere to start a business, either from a small business loan, maybe they inherited some cash, so now they have the opportunity of a lifetime to start their own business or that kind of thing. So invested cash in the business means that I have more cash, so I'm going to debit cash because it's an asset and that's how it's increased. Be sure you put your numbers in very carefully. You don't want to make a mistake in inputting your numbers. The credit part of that is going to be owner's equity, because when you invest cash in a business, you increase your cash and you also increase your net worth in the business for the same amount. Therefore, your debits equal your credits. Left side of the equation is still equal to the right side. The next thing you've done is purchased supplies for cash. In other words, you've paid cash for supplies. So in that case, you're going to decrease your cash. So in transaction B, I've decreased cash 800 and I have to credit cash to decrease it, but I have more supplies. So in transaction B, $800 more supplies. And the last one, I paid a utility bill, $1,500. Again, paid cash for utilities, so I'm going to decrease my cash by $1,500. And I'm going to increase my utilities by that same amount, $1,500. And then they want us to foot the balances anywhere there's a square. I'm going to add the two credits, pull up my pull up my calculator. So I'm going to add 800 plus 1,500. And you can probably do this in your head, but you want to be sure it's accurate. 2,140. And then what I want to do is subtract the left side from the right side. Cash is an asset, so it's a debit balance, so it should normally have a debit balance. If it has a credit, that means we're in the red. We've already overspent cash. Most of us understand that. 7,900 minus 2,140 equals a balance of 5,760. For capital, we only had one effect, so we don't have to do anything there. Supplies and utilities is the same way. So we only had to foot the first account. And check your work. Oops, I made a mistake. So that should be 2,300. This was actually a good thing, so I can show you how to fix errors. So I need to subtract 7,900 minus 2,300. So what I did was I had something in my calculator apparently that didn't get cleared out. So it's 5,600. And check it again. And there you go. Then you would be able to submit your assignment.